Hey everyone, welcome back to the channel. If you're new here, I help you make sense of the madness in crypto so you can stay informed, not emotional. Today's video dives into the truth behind Bitcoin's latest crash, what's really causing it, who's behind the selling, and what it means for the rest of 2025. Smash that like button and subscribe. It really helps the channel and keeps you ahead of the next big move. Over the last 48 hours, Bitcoin fell sharply below the I-100K level, triggering a wave of panic selling and more than 1 billion in leveraged positions being wiped out. This wasn't just retail panic, this was systemic. We saw major liquidations across perpetual futures, and on-chain data shows whales quietly moving BTC to exchanges just before the drop. Meanwhile, the mainstream headlines keep pushing bullish narratives: ETF inflows, institutional adoption, and halving optimism. But under the surface, the data tells a very different story. So who's actually selling here? 1. ETF outflows. Some Bitcoin ETFs that saw massive inflows earlier this year are now seeing steady outflows, suggesting that institutions are taking profits or rebalancing positions. 2. Miners. Miner wallets show increased BTC transfers to exchanges, likely to cover operational costs as hash difficulty rises and energy prices spike. 3. Macro pressure. The Federal Reserve's latest comments hint at delayed rate cuts, strengthening the dollar and putting downward pressure on risk assets, including Bitcoin. All of this combined created a perfect storm: retail panic, institutional profit-taking, and macro fear all hitting at once. Now here's the interesting part. While retail investors are panicking, institutions might see this as opportunity. Historically, when the fear and greed index drops into extreme fear, Bitcoin has often been near local bottoms, not tops. We saw this in 2020, 2022, and even in early 2024, just before the last major rally. Smart money often buys when retail is scared, and right now, fear is everywhere. So, is this the start of a new bear market or a setup for Bitcoin's next leg up? Honestly, it could be both. Short-term pain, long-term gain. The next few weeks will be crucial. Watch ETF flows, miner behavior, and Fed policy closely. If support holds above $90,000, the comeback might be closer than you think. If you found this breakdown helpful, make sure that you hit like, subscribe, and drop a comment below. Do you think this is the end of the bull run or the perfect dip to buy? Let's talk. Stay smart, stay steady, and as always, see you in the next one.